USN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry Lutz, and it is Washington's birthday, February 16th, 2015. But just because it's a holiday in the U.S. doesn't mean that the world has stopped moving. In fact, it's moving right along, and we've got John Rubino to talk about it. John, good morning.
Morning, Kerry.
Hey, so lots of good stuff going on in the world. And what, pray tell, is happening now?
Well, we might as well start with Greece. That's the big news.
Absolutely.
So they're in negotiation as we speak with basically Germany, trying to figure out how Greece can survive with the amount of debt that it has and in a relatively sound currency environment like the euro. And they really can't. So the question is, are they going to leave the Eurozone and go back to the drachma, or are they going to remain in basically a depression for as far as the eye can see, which is what Germany seems to want them to do? Or are they going to cut some kind of deal where Greece gets like a debt jubilee, where they cut their debts in half as a way of keeping them in the Eurozone and allowing them to be a functioning semi-capitalist society going forward? And probably what they're going to do in the short run is just kick the can down the road. They'll cut some kind of a deal that's basically an extension where Greece gets 6 months or whatever to try to work out its problems internally and then come back and do a final debt restructuring. But of course, Greece is now ruled by a far left party that's doing a great job of standing up for itself in terms of not accepting austerity anymore. But they aren't going to do a great job from the standpoint of trying to create a functioning capitalist society, because their policies are basically the opposite of that. They're going to increase government spending, raise pension payouts, and in general, increase the size of the state at the expense of the private sector. And so that's not going to set Greece up for progress going forward. It's just going to be more of the same. That's what got Europe in the trouble that it's in to begin with, basically, is bloated public sectors and truncated, brutalized private sectors. And so that's what we'll see from Greece. But the bigger problems with the Eurozone are that the major Eurozone countries have Greece-like problems of their own that are in the background right now because we're all focusing on Greece. But actually, Italy and Spain and several other countries are in almost as bad a shape. And they're going to have to be dealt with. And that's the real problem, because you've got elections coming up continuously in all of these countries that are, still nominally democratic. They're not really, because the unelected bureaucrats in Brussels basically run the Eurozone, but the Eurozone countries still have elections. And so you're seeing anti-Euro parties rise in these countries where, in France, the National Front, which is a right-wing anti-Euro party, now leads in opinion polls. In Spain, Podemos, which is a radical left-wing anti-Euro party, leads in public opinion polls. So the upcoming round of elections is going to be really stressful for the guys trying to keep the Eurozone together. And it's not clear how it works out, because you see what happened with Greece. They elect Syriza, which is an anti-austerity party, even though they claim to not want to leave the Eurozone. They definitely don't want to do the things that will be required of them by Germany to stay in the Eurozone. So they're kind of an anti-Eurozone party. And you see what's happening here. They're threatening to leave, basically, as a way to get a better debt deal. And we'll see where that leads. But when Italy or France or Spain try something like that, it's a whole different animal, because those economies are orders of magnitude bigger than Greece. And therefore, the threat of them leaving the Eurozone is dramatically more serious for the Eurozone holding together going forward.
Oh, yes.
And so right now what we're seeing is hundreds of thousands of people rally in Rome to protest over reforms of the labor law, which are really necessary if Italy is going to be a functioning country going forward. And Spain, meanwhile, is trying to short circuit the process of national debate via street demonstrations by tightening security laws. And that's just giving the Spaniards another reason to protest. So now they've got tens or hundreds of thousands of people in the street protesting the new security laws. And Germany, meanwhile, is kind of on the other side of the spectrum. They've actually benefited from the Eurozone as it's currently structured because they're able to sell lots of stuff to all the periphery countries who are able to borrow lots of money to buy German stuff. So the Germans get to have a trade surplus within the Eurozone. But that was a very temporary situation. Now, all of this debt that was taken on in order to buy German stuff looks like it's going to have to be covered by German taxpayers. And they don't like that either. So in the most recent election, in the most recent election, the ruling party, Angela Merkel's party, lost big. And that means that in upcoming elections in Germany, the anti-Euro parties are going to gain strength as well. So you're seeing it everywhere across the board. And because, the way democratic countries work is there's always an election coming up. There's never a time when you aren't looking at an election or you're not in an election cycle. So these guys are going to have a continuous drumbeat of bad election results from the standpoint of the people currently in charge of the Eurozone. And it's going to come to a head with one of these parties, maybe National Front in France, for instance, just calling the Eurozone's bluff and actually trying to leave the currency union. And at that point, everything falls apart. And so there doesn't seem to be any real solution to this. But what they will try going forward is really extreme experimental monetary policy, because that's what we've always done for the last 10 years, where they'll cut interest rates, which are now more or less zero, into negative territory for a lot of these countries. We're seeing negative interest rates, which is a separate subject that's interesting in its own right that we can talk about in a minute if you want, Kerry. But we're seeing that already in parts of the Eurozone. And so they will have no choice but to go more negative in more places in the future as a way of trying to make money so cheap that people borrow and then you get some growth from that and everything. But it almost certainly won't work because negative interest rates bring all kinds of new distortions that cause problems that have to be dealt with in the future. So the Eurozone looks like an irredeemable mess going forward. And that's, it's bad for them, but it's great for you and me because it gives us unlimited amounts of stuff to talk about in the future. We'll be able to fill up so much time explaining this to people. And so, from a theatrical standpoint, this is interesting, watching an ill-conceived major currency union just devolve into chaos. But I suppose for the people involved in it, not so much fun.
Not fun at all.
Yeah.
But look, John, it's got to end someplace. It's getting more and more difficult for the EU to function, for these individual countries to function, and they're getting close. I mean, we've seen this so many times already, John. Where's it going to end? It's got to end at some point, right?
Well, it ends with the dissolution of the common currency, because it turned out that so many of these countries can't function under a reasonably stable currency regime.
Yeah.
So the only thing that's left for these guys to do if they want to keep it together is to dramatically devalue the euro, which they're doing. The euro is down big against the dollar in the last 6 months. And presumably that's going to help European exports and give them a little bit of breathing room. But it'll come at the expense of the dollar, which it already has, and the U.S. economy. And we can't keep going with a continuously strengthening dollar because that's going to choke off our export industries and push us back into recession. So at some point, the dollar and the other currencies that are strengthening against the euro are going to have to stabilize and reverse, and they're going to have to be pushed down for the sake of their domestic economies versus the euro. So it doesn't work in the long run. You know, currency wars are a zero-sum game, and so you have to have a functioning capitalist society going forward in order to survive. And manipulating your currency doesn't save you. That just delays the inevitable. And so what gets interesting now is what happens in a world of negative interest rates, because that's what's coming. You know, you're seeing it happen more and more in different places. Denmark and Sweden, for instance, now have negative interest rates on some bonds and some bank deposits. And Germany, same thing. Japan, same thing. And so that's a fascinating subject from a lot of different angles. But I think the gold angle is maybe the most interesting of all, because it used to be that, you know, gold was a safe haven asset that you could buy and have stored in a vault, but you had to pay for that. You had to pay about 1% a year in storage fees. So gold was cash flow negative asset to own. And you could contrast that with a government bond, which back in normal times would yield maybe 6% a year, right? So the spread between gold costing you money to own and a high-grade government bond, which pays you a reasonable amount, was pretty huge, you know? So most people would rationally choose the bond. But now, with bonds yielding, say, negative 1% in a lot of places, and gold still charging you about 1% for storage, the cash flow comparison is about equal. They both cost you a little bit each year to own. So people with capital seeking very much a safe haven asset out there now have a really different set of calculations to make, because they've got to look at these fiat currencies and think, you know, has a fiat currency ever held its value for long periods of time? And the answer is no. Meanwhile, has gold held its value for long periods of time? Yes. You know, you can go all the way back to the Roman Empire and before, and gold held its value. It bought about the same amount of life's necessities then as now. You know, it's held its value for centuries. And so if you're in need of a very safe place to put your capital, and you look at a bond denominated in a fiat currency and gold, and they both cost you about the same to own, the logical conclusion is that gold is the better place to be. And I think we'll see that going forward as negative interest rates spread from place to place. And so it's very positive for gold in and of itself, you know, negative interest rates. Of course, if they're indicators of a gathering deflationary vortex that's going to suck the global economy into it, then that's maybe a different story. But gold is still a good thing to own in that circumstance. So if currencies are going to go up in value because of massive deflation, that's, I don't know, you know, then you get into some really crazy thoughts. The conclusion of which is that do you really want to live in the world in which that's the case? And you know, it might be the case, but it's not something to look forward to.
No, definitely not. So question is, what's going to happen to the world? Where are we heading? And how do you protect yourself when the deposits that you lived on for your whole life, who knows what's going to happen? Well, we'll return to that and we'll address it when we return on the Financial Survival Network.
FSN Radio. It's all about what's next.
Just when you thought gold and silver were never going higher, they're back again. All the experts and naysayers have been telling you to invest in stocks, but gold is back over $1,300 an ounce, and silver has broken through $18, and they look like they're going much higher. And when it comes to buying gold, silver, or diamonds, I go to Cloud Hard Assets. Tom Cloud has been in the business over 38 years. Call him now at 800-247-2812. Tom's service is outstanding, and you can buy with complete confidence. Order today, and you'll have your metal in your hands in 10 days or less. Tom takes the guesswork out of what to buy, and you'll buy at the lowest possible prices. And as a special to FSN listeners, you'll get free shipping and insurance. So call him today at 800-247-2812. That's 800-247-2812, or find him on the web at cloudhardassets.com and tell him Kerry sent you.
The Financial Survival Network. It's all about what's next.
And if you just joined us, we are speaking with John Rubino, who is the proprietor of dollarcollapse.com and co-author of The Money Bubble, along with James Turk of Gold Money. And it's funny, John, we were talking with Alistair McLeod last Friday about this. And, the way he described the politicians of Europe, they're a bunch of spoiled children, especially in Greece. They have absolutely no desire to address the issues that drove them into this crisis in the first place. Like you said before, excessive government spending, entitlements, out of control pensions, low to non-existent productivity in the government sector. You just have to look around and you realize that pretty much government employment is really a non sequitur, and it's really just a euphemism for welfare program, right? It's just another welfare program when you get down to it, isn't it?
Yeah, well, I think politicians in a fiat currency environment see government employment as a way to buy votes. They use it as a way to keep people from being unemployed. You just create a little bit extra currency, increase the government program, hire some more people, and those people who might have been on the street and might have been voting for your challenger are now employed. And so that has always been the case in, for instance, big city political machines in the U.S. Patronage is a way to buy votes. And in a world where you can create as much new money as possible, it shouldn't be a surprise that governments, which are the entities that get to create that money, start out by buying votes and just increase the process over time. So the government employment, government programs grow without regard to the health or sickness of the economy. They just keep getting bigger year after year after year because the governments can create the money to make that happen. And so, Europe is the perfect example of that because they have developed these incredibly flaccid societies where the government is 60% of the economy. And so most people live off of taxpayers or off of the central bank's money creation. So they don't have any sense that there has to be wealth created in the first place before you can spend it on a government program. That's not part of the thought process. And that's part of why Europe has such a problem now dealing with the limitations that are being imposed on it by the size of government reaching its logical conclusion. Once you're 60 or 70% of the economy, you can't get any bigger because that completely chokes off the private sector. And so European governments are having to, for the first time, basically since World War II, live within their means. And they're facing limitations on how many new people they can hire, how they can use that process to get reelected. And they don't know what to do. They've never had to do this. We've created an entire generation of politicians who have never really had to say no on any scale. And it's true in the U.S. too. The reason Congress is so incompetent right now is because these guys have come of age always saying yes.
Yeah.
They get together, they kind of compromise where one group gets a 6% increase and another group gets a 4% increase. They shake hands, and that's politics in today's world because we have printing presses where we can create as much new currency as it takes to get these deals done without antagonizing any major constituencies. Well, those days are coming to an end now, and we're facing actual fixed amounts of spending that we can't go beyond. And
terrible.
So these guys,
these
guys
the
have
sausage days are over, huh?
Yeah, and so they have no idea how to go back to a major constituency and say, you know what? I'm sorry, you don't get any increase. Not 4%, not 6%, nothing.
I'm loving it. And I like it too.
Yeah, well, that's how life should work, right? Everybody has limitations on what they can do, and everybody has to prioritize. And you deal with it. But governments haven't had to do that. So, so it's kind of funny to watch them flail around and be unable to create a budget and call each other names. And so, everybody feels like they're losing now, whereas before everybody felt like they were winning. And so they're being really hateful in the U.S., you're seeing this divide between the Republicans and the Democrats now, where they can't work together because neither one can stand the idea of the other winning anything. So they can't compromise. And it's sort of the same thing in Europe, but it's way more convoluted because the European society has these expectations of being taken care of. And so like in Italy right now, their labor laws are really...
It's kind of like my ex-wife.
Childlike. Yeah. But, you need to keep writing that check, Kerry. Don't think
we're done. We're finished. But that was the concept.
Yeah.
That was the concept, much like the EU. That's what we had in mind. So
yeah. Well, in Italy right now, the labor unions are so powerful, and it's so difficult to fire somebody once you've hired them.
Yeah, I read that.
That companies stay small because then they can kind of travel under the radar without having to deal with big labor unions and the really draconian labor laws that kick in after you reach a certain size. And so, you've got lots of small businesses, but you've got lots of small businesses that can never grow. They just stay tiny. And so you don't have the dynamism that you have in a society where it's possible to go from two guys in a garage to Google in one decade. There's nothing like that out there for Italian businesses. So it completely changes the nature of what they're doing. Basically, what they're doing is just trying to pay the bills and stay out of the way of these big, powerful forces that will destroy them if they come to the attention of, and that's the kind of society that can't function in the modern world efficiently. And that's what we're seeing, and so the government comes in, tries to fix it. And you get hundreds of thousands of people in the street who see the government trying to take away their lifetime job guarantee. And so it can't be done. You can't get reelected when you've got hundreds of thousands of people mad at you over some tiny little change that you tried to make in an insane labor law, so you're basically hamstrung. And so what has to happen for these societies is they have to literally run out of money and then have no choice but to sit down and allocate what's left rationally. And so you have to have a big crisis for that. And that's the end game for the Eurozone, is some kind of big reality changing crisis in which people's perceptions of the world change, because they haven't changed yet because they've still got a printing press. Take away that printing press and confront people with an actual set of real world limited resources. And then you get rationality, but you have to go through the process of people who are basically children in a lot of ways growing up. And that's painful, passing through adolescence is never fun. And so that's what has to happen to most of the developed world right now, because we've been able to live in this dream world of the printing press, creating as much new currency as we need to get by so we can borrow as much as we want. But, Kerry, do we have time for one more thing on negative interest rates, or are we out of time?
Well, I'll tell you what. Why don't we, when we come back, we will talk about negative interest rates, because I think it's so important, John. It is such a destabilizing force that you're probably not aware of out there. It really makes a huge difference, John, and
oh my God,
emphasize it enough. It's the death of the saver. So when we return, negative interest rates.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
And John Rubino is with us. We're talking about negative interest rates. Just wrote a major piece about it, especially as it relates to gold. But, John, you can't talk enough about negative interest rates and its adverse effect on the economy, the distortions, because if they get negative enough, we're talking a few percentage points, people start delaying acceptance of payments. It becomes the inverse of what happens when you have inflation. It introduces a whole level of economic distortions into the economy that really are downright damaging and destructive. You know what I'm talking about here.
Well, yeah, it's a huge shift of resources between different groups in the society, because already we've seen retirees on fixed incomes just be crushed by the fact that the savings that they thought were going to generate 6% interest forever and allow them to live now generate 1% or less than 1%, which means they don't have anything like the income that they thought they were going to have when they were making their retirement plans. So now, if we're going to push rates into negative territory, that means that these guys with their savings have to pay to deposit money in the bank. And so where before they were, at one time they were cash flow positive, now they're barely cash flow positive, and pretty soon they're going to be cash flow negative with their savings. So that's incredibly destructive to a whole generation of people who, worked hard, played by the rules, saved money, put it away.
And they buy high yield debt and risky investments like oil field development.
Yeah.
Right?
Well, see, that's what you have to do. All these people are being pushed into higher risk assets because that's the only place they can make enough money to survive, and not surviving really isn't an option, right? You have to do whatever you have to do. And at the same time, negative interest rates are this incredibly sweet deal for corporations who can borrow, if you can even call it borrowing anymore. When they pay you to borrow, you don't have to pay them. So you can borrow at like negative 2%. And let's say you've got, stock outstanding that has a 2% dividend yield. Well, you can borrow for negative 2%. And then buy back your stock and not have to pay that 2% dividend and make a nice 4% spread there. So borrowing money to buy back your stock is now a cash flow positive activity, which it has been lately when you consider the tax implications of it. That's why so many corporations are buying back so much of their stock and pushing up the stock market.
That's perverse. That's perverse, and it's destructive. It is. And the way the whole system was set up is you're supposed to save and defer consumption so that you would be able to have enough funds invested, earning a return, so that when you got to be in your late 50s, early 60s, or later 60s, you could sit back and then with the return, which was then also invested, you would have enough to live on. But because of Uncle Sam bailing everybody out, that isn't what's happening anymore, is it?
No. And so if you're a retiree, what you have to do is jump aboard the equity gravy train along with corporations. Yeah. And so, these companies are out there buying their stock back without any regard to the price of the stock or the valuation. They're just looking at is the spread between what we have to pay to borrow and our dividend yield positive for us, and it still is in a lot of cases. So you see these companies borrowing tens of billions of dollars and then buying back huge amounts of stock and pushing up the stock price. So we've got a whole generation of retirees who are now being forced to pile into basically the riskiest assets that regular people can buy, which are common equities and junk bonds. And the valuations of those things are rising to levels that are really dangerous. You let anything happen in society that scares people, and you'll see the stock market just crack. And so these poor retirees are going from not being able to earn anything on their retirement funds to getting a negative return now that interest rates are negative, to jumping into stocks and then losing 20 or 30% in the next bear market. And so they really can't win. And it's astounding that with the power that, for instance, retired baby boomers have right now, it's astounding that our generation is allowing the current crop of politicians to stay in office and do this. Because you would think that if anybody's out in the streets protesting right now, it would be retirees who are now making, 0.5% on their savings when they thought they were going to make 6% and are having to eat dog food or live with their kids or whatever it is you do when you're 65 and your projected income has been cut by 90%,
Yeah.
It can't be good, whatever you have to do under those circumstances.
This is awful. This is the worst of all possible worlds that we're living through. And luckily, I'm not at that age yet, but if it keeps up, I could be.
Well, yeah, because interest rates are still falling. So if they stretch the process out and, 20 years from now or whenever you decide to retire, Kerry, interest rates are wildly negative, then you got that to deal with too. So
it'll be never at this rate.
Yeah, I know. I think.
Looking forward to never.
Luckily, with our jobs, we don't have to lift heavy things or anything, so we can keep on doing our jobs for a long time. But
I'm just hoping they'll tell me when I have Alzheimer's and it's time to quit.
Well, no,
I'm sure they'll let me know.
You'll just get funnier and funnier online. So
I'm just hoping they're going to tell me. It's insane, and this is what happens when government intervenes in credit markets, where, unbeknownst to the large majority of the population, John, but not to you and I, they have no business. Mises said it over 100 years ago. The Austrians have been saying it ever since. But is anybody listening, John?
No. Well, the guys in charge are not. And we'll see. I mean, this has to end incredibly badly. And what they're doing now has to be discredited on a vast scale. But the timing of this is hard to figure out because we're getting away with it. And the major fiat currencies of the world are, they're in a trading range. They bounce back and forth against each other, but they look basically sound in large part because we're measuring them against each other. So they might be able to continue this for quite a while, or it might all fall apart tomorrow. We just can't know. That's the really frustrating thing about it, because especially from the standpoint of people looking for low risk income, do you hold on and just try to get by with the meager amount that you're earning now in the hopes that the system resolves pretty soon and we go back to normal, rational times? Or do you just go for it and assume that it's going to go on for another 10 years? So ride the gravy train, buy equities, buy junk bonds, and then just let them run and hope you make a bunch of capital gains in the meantime that you can cash out later. And these are really, really interesting intellectual discussions for you and me, but incredibly stressful for people who actually have to bet their retirement currently on something like this. And it's despicable that we put these people in this position to where they're making life and death decisions almost literally with their money without good information, because how does any regular person understand what's going on right now? There's no precedent for it. Even economists are arguing about it. And so to expect some regular guy who's worked at a non-finance job for a lifetime to have to make big decisions, it's just terrible. No matter how you look at this, it's really immoral.
The other thing is, like, somebody who's 60 years old, 65 years old should not be speculating in the market, hoping for large capital gains on their portfolio. That's anathema to sound financial planning. Even if there wasn't going to be a currency collapse, which you and I both feel pretty strongly about, but let's just say that was never going to happen, right?
Yeah.
It's not what you should be doing. You shouldn't be relying, under the portfolio theory allocation model. You start out in your 20s or 30s when you first start investing. You're 80% in stocks, 20% in bonds, or you're in the majority in stocks, minority in bonds. When you get to your 60s, you're 20% in stocks and 80% in bonds, right? But you can't possibly do that now, no matter how prudently you saved all of these years and you did the right thing, right? You can't do it.
Yeah. Well, and the thing is, most of these guys, most retirees kind of got that. They understood that they were going to switch out of risky stuff and into safe things that generate a little bit of income eventually when they weren't working anymore and they needed that cash to live on. And they listen to their financial planners. They set up their retirement to have enough money to allow them to live at 6% interest or whatever the projection was. And so we've, as a society, really betrayed those guys.
Yeah.
Because they spent a lifetime doing what they were supposed to do. And now they're being impoverished by this. And when interest rates go negative, not only will we not be paying them what we should be paying them as a society, but we'll be taking money away from them and giving that money to stock speculators and big corporations and people who are profligate now, people who borrow huge amounts of money. So, it's from a moral standpoint pretty close to as bad as it can get. There aren't too many things we could do short of just rounding people up and shooting them that is as reprehensible as today's economic policies.
That's for sure. It's downright criminality, and well, there's nobody out there to stop it. Nobody seems to want to stop it, but just going to happen. Anyways, take a look at John's site. He talks about issues exactly like you're hearing now. dollarcollapse.com. Check out his book, The Money Bubble. And while you're at it, you can follow the link from financialsurvivalnetwork.com. We've always got his link there. And sign up for our mailing list. Got a good webinar coming up in the not too distant future. And check out the site as well. Stefan, our webmaster, works tirelessly and just getting you the anti-mainstream media truth about what's really happening in the financial world from wherever it might be. Anyway, John, next week, same time, same bat channel. We'll talk to you then.
See you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.